Hey, what's going on, everybody? Hopefully you're having a good day. My name's Andy. My channel's Finding Value. If you like making money, subscribe to the channel. We're going to put some good picks in front of you. And if you like this content, give me a thumbs up. So we saw some pretty big action in some stocks today. A lot of the stocks that we were talking about, some of them got some action, and they popped. Now, one thing I want to be crystal clear on, you got to be positioned before these pop. You don't want to be chasing prices. I'm throwing a lot of information in front of you. I'm throwing a lot of charts. I'm throwing a lot of things. And if you're a new investor, I can see how this could be a little bit overwhelming. So my suggestion to new investors, you need to develop a strategy and a plan, and you need to position size correctly. And what I do in my portfolio is that I take smaller position sizes and I spread out my investments. I find a couple of sectors that I strategically position investments in, and I spread that money out, and I buy them when they're down. I don't chase price, I chase value. And when something is going up in price, the value is being realized. And I want unrealized raw value, so to speak, in my portfolio. I'm looking at chart patterns, I'm looking at fundamentals, and I'm looking at the fundamentals of the sectors that I'm investing in. Now, the number one thing that is important in investing in a sector is that the price of the commodity goes up. That is the most important thing. It is more important than the fundamentals of the companies themselves, because bad companies can be bailed out by very high moving prices. And what I am envisioning in the future is that the prices, I'm going to step back and talk about something very quick. A lot of people, and reading in the comments, they're looking at a future that's right here. It's right here. What I need you to do is take your other hand and take this down, the blinder, and I need you to be looking way out there. You know, like when you point over the fence to hit a home run, like Babe Ruth did? I need you past that. I need you to think and look past the day-to-day fluctuations going up and down. I need you to position strategically, not to be performing actions tactically. Tactically is the wrong move. It's not efficient, and it's not going to do you any well. Strategic means that you're positioning and buying positions for a reason. This isn't to buy positions to get a 50% gain or 100% gain. This is positioning for deficit, for shortages. Strategically positioning in companies that have knowledge that other companies can't replicate. They can't. Basically, their moat is management, or their moat is the barrier to entry into, say, uranium. You know, you got to have expertise. You got to be already kind of in the process of getting things going when this big commodities bull market comes. Now, I also want to talk about this strategic positioning. This isn't 100% fundamentally based off of supply and demand. That's another thing I want to touch on. This is the second portion of it. So we're strategically placing bets in sectors that have deficits that are supply and demand. The second portion is an inflation portion. The inflation portion is that gigantic tailwind that's going to be pushing in behind our investments, pushing them forward. And it's also a revaluation of assets. Because when interest rates go up, and they will in the future at some point, I can't tell you when. Remember, this is looking way out and strategically positioning. We're positioning for that asset that's being revalued. We're going into the assets that are going to be revalued upward. I don't want to be in assets that are going to be revalued downward. So when I am talking about these big chart patterns, these decade-long chart patterns, we are strategically positioning for a 5 to 10-year move. We are positioning in sectors that are going to be in deficit. And the charts that I'm showing you is all, I would say, information about those companies and more information about why we should be strategically placing our bets, because the market thinks these are the spots to be. So we're marrying up the technicals, we're marrying up the fundamentals, and we've got the market conditions pushing us from the back moving forward. So this is it's extremely important that you understand what you're doing here and what I'm doing. I am strategically taking bets for 5 to 10 years out where we're going to see massive gains. Not 100%, not 200%, not 300%, 3,000%, 4,000%, 10,000%, or 100,000%, maybe, if it's possible. We'll see. So I'm going to go over a market update here. I'm going to touch on some things. Keep all of that in mind about us strategically placing our bets. I'm also going to go at the end of this over my hypothetical portfolio of what I would be adding into the portfolio right now, because I see some very good opportunities here. I don't want you guys to blow it. So here we go. Remember, this is financial educational purposes only. This is not financial advice. So here's the market update. I'm going to go in here. So strategic positioning, I already touched a little bit on that. These are the sectors that I think are very good sectors. They are all extremely underpriced or undervalued, however you want to call it, to other assets. These are the ones I'd be focusing on. So here's the 10-year. We came down, bullish engulfing, going to the upside. So rates are probably going to go higher. That's what I see. Check. Inflation's still in check. Gold. Gold, remember what I said. We had the little down days. We still have a little down day here. We are still game on for a move potentially to the upside. What I like about this is we've got a wick on the bottom. This is a hammer. We've got a bigger up day here, and then the small pullback within this candlestick. It's okay if this pulls back below it, as long as the candlesticks are small and the buyers are controlling it. So that's what I'm seeing right now. I don't want to see a big, fat, huge down day coming up down here. Silver, looks like we had a little bit of a pop here. We do have a little bit of a bullish engulfing. I would have liked to see this thing be more, up here, end the day with more strength and momentum to the upside. But it looks like there's some sellers out there, whoever they may be. But it's going to come. It'll come. And I think they're going to try to hold this thing down till the end of, beginning of February, end of contract. But we'll see. We'll see if they're able to do that. This thing may pop hard. So you better be locked and loaded and ready to go. Now, I've been talking a lot about McEwen mining in a couple of my market updates. It's in my hypothetical portfolio. And the thing I want to get at here is that when you have chart patterns that look like this, I draw it out. This is a decade-long chart pattern, and we just popped up. It was a 30% update today. We popped up out of this movement here. You got to position before the pop. You got to get locked and loaded and ready when we see the opportunities. You don't wait to act on it. You buy it when no one wants it. Here's a zoomed in shot. Nobody wanted this. I felt like I was the only one buying this. And I see a hammer here. I see a bullish engulfing here. I see a big update with the small down days. All of the signatures are there to buy it. They're all there. There's no excuse to be hanging out of this stock. We should have been cost averaging in. Even when we got a little nervous, remember what I said in yesterday's update. When you feel nervous, that's probably the time you want to cost average in a little bit. And here we go. We got the 32% update, basically. Big move up. Now, is this going to continue to go up? I don't know. Remember, a lot of these things like to backtest. So I can't tell you where this thing's going to go in the short term. All I know is that before this chart break, it was an exceptional buy anywhere in this chart, place down here, anywhere. But we got the pop. We popped through it. So I bet you we're going to see probably a little pullback at some point. Maybe it pulls up a little bit and then pulls back. They all kind of do that. You have to condition yourself for these big punch throughs and then the pullback. And what do we do on the pullback? We buy the pullback. That's what I do. That's where I like buying. So we got McEwen Mining that kind of broke through here. Now, Laramide. People probably aren't looking at Laramide. We had an 11% down day. Oh, no, it's bad. Our portfolio went down, right? Well, I bought. I bought at 20 cents. I said, this thing's going low. I saw it reverse and start coming back up. I'm like, snap it. Let's get it. Bought some Laramide. So I added my Laramide position here. That's what I did. Next, Contango. I'm looking at Contango. This thing's pulling back. Remember, we have a big line coming through, and I think it actually comes through here or somewhere through here. And it's pulling back and going to back test. What do we do on back test? We buy the back test. That's my opinion. We've got a 50-day moving over the 200-day. Everything is in check. I bought some Contango. That's what I did. I added in. Now, could this go down the next day or two? Sure, it could. I'm adding in. I'm slowly cost averaging in to Contango. I like Contango. TMQ, Trilogy Metals. Oh, it hasn't gone yet. What do we do here? We've got this nice chart pattern breakout. Boom, punch higher. Bullish engulfing. And then it came down, back tested, bought some more. TMQ, I bought a little bit more. And remember, we have to break through this. There's a line that comes through here. It's right up here, and it's going to rest a little bit and then try to do a punch. It's going to try to punch through. And when it punches through, you could see a rash of buyers step in here. But remember, we're playing with statistical probabilities. We're not playing with 100% outcome. Spread your money out, spread it out, add some in, and hold on for dear life. Next, GoVX Uranium. What do we see here? We've got the 50-day pulling up. We've got the 200-day. This is a long-term strategic position. We've got uranium at 60 to 1, 60 pounds to 1 ounce gold. Cheap as dirt. You need to look at it through this. We're not looking at this. We're looking at 4, 5, 6, 7, 8, 9, 10 years out. This is strategic positioning. We are buying at rock bottom prices. We've got a bullish engulfing. We've got a pullback with a wick at the bottom. This could be called a bearish or a bullish piercing here. I think it'd be prudent, if you like GoVX, to sprinkle some money in if you want to. That's what I would do. Next, Grand Tierra Energy. I know I got some questions on this. Hey, it's not moving up. What the heck? Well, there's your move. You have to be patient, and we're strategically positioning in this company. Remember what I said about the big up days and the small down days. This is your signature trait. You got the update here. We're saying the buyers are here, and then they stepped in and blew it up. Big volume, big volume. Now, I want you to look at this strategically. Stop looking at the blinders that are right in front of you. We have a 50-day moving over the 200-day. We are in oil here. This is a strategic position. I think we're going to have an oil crisis in the next 2 or 3 years because we have a supply of oil being disrupted, and we have a president who wants to cut the oil supply. Problem is, nobody has anything else to switch to. So when the supply gets devastated and the demand comes back, we're going to see an oil crisis. This is strategic positioning. I'm not telling you to go out and buy Grand Tierra. What I'm telling you to do is look at oil companies and look at it from a different perspective, from a strategic perspective. From a perspective that we just had COVID that destroyed all of the supply, and that inventories, when demand is low, are going to be filled with oil, and everyone's looking at the inventory. They're not looking behind it saying, well, what are we going to produce? Reserves aren't increasing that much, and production's going way down. So everything outside of OPEC is going to crater, and at some point when this demand comes back, we're going to say, well, we need 10 million barrels. Well, OPEC, what do you got? 4 million. Ah, crap. Where's the other 6 million going to come from? I don't know. Hello to $300 oil prices, if it gets that high. I don't know the exact pricing, and I don't know the exact timing. Strategic, though. Strategic. Telluride. Remember what we look for. We've got the bearish engulfing. We got our pullback. We have small, tightly controlled pullback. What do you think that means? It means that it's a continuation pattern, most likely. We've got the trend line here. Maybe it kisses the trend line and goes. Maybe we see a down move and then an up. Look for the hammers. Look for the bullish engulfings. Look for the bearish, bullish piercing. Look for those chart patterns and buy on those chart patterns if you see them. What does that look like? A bullish engulfing is one that engulfs the ones before it. A hammer looks like this one. It's got a wick on the bottom with a little white body on it. That's a hammer. It means it's going higher. This was a hammer here. It's a hammer here. Boom, shoots up higher. Hammer, shoots up higher. Hammer, shoots up higher. So, and this is a bullish engulfing right here. And this is what I did. This is the dead period that we bought Tellurian and Tellurian. Hopefully that's pronounced correctly. Bullish engulfing with the small little pullback. This is like game on. Boom, game on. And you just hold on. 50-day crossing the 200. Strategic positioning. Next, Camco. What do I see in this chart? I see beauty. I see that timing is now. So we had a bullish engulfing down here. Boom, pushed higher. Here's another bullish engulfing. No, it's not engulfing though. Pushed higher. We had our pullback. Remember, I was like, we're going to have a pullback possibly. We had a pullback. Bullish engulfing. What do you think I would do right here? Add. I would add in. I would add. I like CCJ right here. Encore Energy. There's a couple things that I really like about Encore Energy here. We've got bullish engulfing. We've got bullish engulfing, bearish engulfing, which was the sideways movement of a pullback. The pullback is muted. All these guys could do for a pullback was sideways. We have a bullish engulfing. What do we do on bullish engulfing? We buy them. We add in. I added into Encore Energy into my holdings. I'm strategically placing money into bets where they have high probabilities of going up. The positive thing here, the sellers, all they could do was move this thing sideways. We got a big bullish engulfing. Now, even if this goes down tomorrow or 2 days or 3 days, it's still going to go up. This isn't dependent on the next day. They put in the signal that the buyers are in control and we're going to move up. This is a reversal pattern from this reversal here. That's all they could muster. Now's the time, guys, in my opinion. It's not financial advice. You do what you want to do. SM Energy. Remember what I said about the big bullish engulfing, and then the sellers have nothing here. It's moving sideways. This will go up. This most likely will go up very soon. I can't tell you when, but it's going to go up. We got the bullish engulfing reversal pattern, the pullback within it, and it's waiting. I bought some SM Energy. I like it quite a bit. URG. You like URG? I like URG right here. Big up, and then the small pullback within the candle. Now, even if this goes down, we got a little bit of a hammer here. Even if this goes down a little bit, I think it's a good time to be looking into adding to URG. Next, Sky Harbor Resources. Remember, we're getting into some uranium companies here, guys. Bullish engulfing here. See that? It engulfs the one before it. Move higher. We've got a pullback here. That's dark cloud cover, bearish engulfing, and then we've got a hammer that is a bullish piercing hammer. I would be adding a little bit right here. I like it right here. Looking good, Sky Harbor. So I want to go to my hypothetical portfolio here. And I want to touch on some of the things that I did in my hypothetical portfolio to keep you guys updated. I don't really care what I'm adding in here. Just listen to what I'm adding into if you guys are interested. I added CCJ to the portfolio. I added laramide to the portfolio. I added to TMQ. I added on that back test, 128. I added to TMQ. I added to, I'm going to add to SM Energy. I think, excuse me, I think SM Energy, I don't know what the price is right now, 846. I'll put 846. I'll add, just use that. Use whatever's in there. I added to SM Energy because I think that looks good. I added to Blue Sky Energy because that one looked good. I added to Baseload Energy. I added into that. I think that looks good. I added into Encore Energy. Added into that. I added into, I would add into Sky Harbor. Actually, I'll add that in. I'll add that in after. Here's Mux. So I added into those, and I think those look good. I'd add into Goviax too. I'll add those in. So I added into those companies. The portfolio right now is up a total gain of 2.78%. That's what we're up. Well, the hypothetical portfolio is up. It was up 4.12%. I was down a little bit. That's what I would add into. And I would continue to cost average in when I see companies that look good. And that's how I would manage my portfolio. Just like this, I'm adding little pieces into it. So this is what I'm doing. You can follow that lead if you want to. There's other companies that look good. I didn't put all of them in there. The uranium sector, a lot, half of these companies are looking pretty good. And if you're seeing bullish engulfings when you look at the charts, I would add a little bit in. And it doesn't matter if they go back a little bit. It's okay. Just add in a little bit. Do what you want. Hopefully you guys like this content. Hopefully this helps you out. Remember, strategic positioning, not looking at, hey, I got a 30% gain. Should I sell? No. 3,000% gain, 4,000, 5,000. That's what I'm going for. Looking in the future, position strategically your portfolio, spread it out, get it right, and then sit tight. All right. Thanks for listening. This is Finding Value. Subscribe. Give me a thumbs up. Appreciate it.